Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back. This is the video alert that we do here each and every night on the membership side of our blog. We had a pretty active day, and although the markets seemed to be really kind of off, a lot of the things that we were trading were not moving in the right direction for us today. Still got a lot of time between now and June expiration, and then obviously some May contracts will continue to start rolling off or hedging here in the next 2 weeks. And tonight we're going to go over 3 of our opening orders, 2 of our closing orders. The opening trades that we had and the closing trades are all very different in nature. It's not really any cut and dry manila trades that we make. And a lot of these kind of surround earnings, at least with Priceline and WFM. So let's actually start with the closing trades today. We actually closed out of one leg of our Iron Condor that we had originally put on for WFM, which is Whole Foods. And Whole Foods gapped down in a huge way and pretty much did a 2 to 3 standard deviation move. And so what that means is that it made a move that the market didn't expect by double. So whatever the expected move of Whole Foods was after earnings, Whole Foods actually made a move that was double that expected move. And unfortunately, that's just a bad move, and we have to obviously deal with that and start making adjustments. Now I'm going to walk you through tonight what we did and what our thought process was for adjusting this trade, because this actually turns out to be a trade that you just really can't even adjust at this point. And there's a lot of things that we can do in the future, but we do need to see Whole Foods rally back up here after this huge sell-off that it had in earnings before we can adjust anything. And I'm going to go through that thought process tonight. So, but the one closing trade that we did have in that spread was we closed out of our call side, obviously because it's worth about 5 cents now. So there's no point in holding it on. We still have the June put spread that we're holding. But on the call side, we made about $190 on that spread. So we can bank that side of the profit. But I didn't put a profit here because we really don't have a full profit until we close out that other side at a profit going forward. So we'll obviously adjust that trade if we need to. Now here's a look at the profit and loss diagram for where Whole Foods is. But actually, before I do that, let me go to the chart. So, all right, so here's Whole Foods, and you can see that actually the last time that it had earnings back in February of this year, you can see that the stock gapped lower, right? And that's nothing new or out of the ordinary for the stock like this to be gapping as much as it does. But you notice just how big the gap was down here. And it wasn't really so much about earnings, because earnings were okay. It was more about the guidance on the conference call from management. And so again, you're going to get these. Again, this really just goes to show you that we have no idea where stocks go at the end of the day. And all we can do is make a balanced, even trade, high probability trade, and keep our position size small. And then we can afford to take a big move like this and not kill our portfolio. But considering that move down so much, our calls were immediately worthless and our call spread, so we closed out that side of the trade. Now, if we actually go to the Analyze tab, I'm showing you guys here on the Analyze tab just a look at what our current position is. So you can see we're long these, or short these 2 credit put spreads down here below the market at 45 and 40. And you'll notice Whole Foods is trading at about 39 or so. So they are in the money, but we're on the dance floor on the bottom side. So we're not at full loss yet, not even close, and we have a ton of time left to go till June expiration. So these things have a real good chance of actually getting back up above this level around 43, 44 or so, and kind of reducing that loss all the way. Now, one of the things that I had gotten a lot of emails about, because what we typically do, and those of you who follow our website and our trading plan, is that if we do have this happen after earnings with an Iron Condor, then we actually look to roll down the call side. And so I just made a simple simulated trade here down below, and that's in red. And this is actually just a simulated trade of what it would be to roll down that call side to some kind of closer strikes. So we originally had the 40, the 50, 55 calls, and in most cases we'd roll down to basically the next section or the next area, which is the 45 and 50 calls. Now, if we did that, we'd only take in today about 11 cents in credit, and that's because, again, those are still so far out of the money at this point that it really doesn't even make sense to do that. We'd take in a total credit of about 6 cents, which would cover our commissions, barely cover our commissions. It doesn't really make sense to even do that. So that's why we didn't roll down this side today. So for those of you who had emailed me today during the market hours and had questions, obviously I want those posted on the website more than email, and I've been telling people to do that more often. But that's the reason that we didn't roll down that side, is because you really just don't get anything for it. So if we do start to see Whole Foods jump back up, and we started to see a pretty good rally in the stock at the end of the day, you'll notice what a huge hammer pattern it had. It actually had gone all the way down to 37.31 and had rallied all the way back. So I think we might see a little bit of a dead cat bounce here and the stock kind of rally up in the next couple days. And we'll obviously be waiting for that, and then we can go in there and make an adjustment. All right, the other closing trade that we had today was on Caterpillar, and this was nothing more than just a call spread that we had originally sold, and obviously with the general market moving lower, got a chance to take this one off pretty quickly at a profit. It's actually a fairly close spread to where the market is trading right now, so we closed out of our 105-110 call spread and bought it back for a $55 debit and took a $55 profit on it. So we made exactly 50% of our max potential gain, which is where we usually like to take these spreads off and get them off of the books. For Caterpillar, really the name of the game is that we're still very, very close with where the stock is in relation to our first strike. So you'll see we're at May expiration, but you'll notice how close the stock is to our first strike at 105. So we don't really want to let this thing go too far. It's kind of given us a nice little profit here over the last couple days, and we want to take advantage of that. And notice that implied volatility has dropped after earnings, which has also really, really helped with our position. So we've seen some premium decay dry up, and notice that the stock has basically traded dead sideways since we entered the trade. Really just a testament to how quickly premium decays with time and with volatility drying up. So we're out of that trade and moving forward. All right, so let's talk about opening orders today. We had another one of these custom orders, and I don't know why I've just been trading these more often, just looking at them. I haven't traded them in a while and just kind of got the urge to trade them again after talking with a coaching student last week. And we did this again. The same thing that we did with Yahoo is XRT, where we actually went in there, and XRT has really high implied volatility right now, and we bought the 80-81 call spread. So we bought the 80 strikes, sold the 81 strikes, and that's typically a debit call spread. Now what we did is, on top of that, we added in one extra short contract. So these 84 calls, we shorted an extra contract at 84. So all of that buying and selling, buying the 80s, selling the 81s, and selling again the 84s, gave us a total credit back of about 7 cents. So again, after all said and done, it basically covers commissions, but it gives us a no-risk trade to the downside on XRT. So we're basically playing a big move higher in XRT, and by doing this combo trade, which is a little bit of a custom order, doing a long debit spread and also selling a naked call, we give ourselves a very huge window of opportunity to make some money. And as XRT rallies up higher, we should see implied volatility drop, which will make this trade really, really attractive and easy to close out before we get into possibly that naked territory that we're in, because we are technically short still naked options on this. But let's go to XRT so you guys can take a look at where we're at and why we traded this. All right, so here we go. So we had a big dip down in XRT in the last couple days, and you see the stock is fairly resilient. It continues to move higher. And notice that implied volatility is still above the 57th percentile. So we have great implied volatility, and we have a stock moving lower, so we want to play the bullish move in this stock moving higher over the next couple days. So here's what we did. If we go into the trade tab here on our platform, and I'll go up to XRT so you guys can see this. Our order obviously is right down here below. All right, so on the actual order side, you notice that we have 3 different orders or contracts that we're trading. We are long the 80s, we're short the 81s, and then again we're short the 84s. So by doing all of this, by doing long the 81s, short the 80, or long the 80s, short the 81s, and short the 84s, we actually move our break-even price, because it didn't cost us anything to get into this. We move our break-even price all the way out to 85, which is about a 20% probability of happening. So this ends up being an 80% probability trade of success. So we give ourselves a wider window of opportunity by just making sure that we take in either a very, very, very small credit or no debit at all. So you really don't want to pay to do this trade if you can work it. And you just have to adjust your short strike up here to adjust that premium. You might have to come in a little bit closer or go out a little bit further, but you want to try to get that net price, at least in our case it was -7, which is a $7 credit. You want to get that price to somewhere around 0 or so, or a very small credit. You don't want to take in too much of a credit, because then you don't really give yourself enough room on the top side. But if we go to the Analyze tab and we take a look at where this is actually going on the top side and how much room we have in this trade, let me just shrink this down here a little bit. So you can see exactly where XRT is trading. So XRT is trading at 81.33 right now. And so our spread is already in the money. So if XRT just stays here and implied volatility drops, we actually make money. And you'll notice that the profit and loss line actually stays above zero all the way down. So if this stock does continue to move down, then we don't lose any money. We just keep that $7 credit that we had. But ideally, we want the stock to get between 80 and 85. And you'll notice that those are our break-even points. So that's really our window of opportunity to make about $100 on this trade after just taking in a $7 credit. So that's where we want the stock to go. We actually want it to rally just a little bit, but not too far above 85. So that's the ideal situation for this trade. Again, going right back to the chart, that means that we give ourselves a window of opportunity from 80, which is all the way down here, to about 85. And that's a pretty big window of opportunity. Again, giving ourselves a little bit more room on the top side because we have no risk to the downside. If the stock just crashes, we still keep our 7-cent premium. So we want to give ourselves a little bit more room on the top side to kind of let the stock rally a little bit and let implied volatility drop in the meantime. So really interesting trade. Hopefully we can get another one or two of those back in the market in the next couple days. All right, so the last trade that we want to go over tonight is actually really a combo trade. It was a trade that I had tried to enter as a total iron condor, and pricing was just moving really fast. So what I ended up doing is splitting the iron condor and legging into it. And this is a strategy that I talk about a lot with my coaching students in our premium coaching membership, is that if you can't get fills for an iron condor, because it's hard to get all of those contracts to match up exactly the same, to sell and buy and all that stuff for exactly the same credit with somebody else, then go ahead and try to split your order into two. So split it into a put spread and split it into a call spread, which is exactly what we did. So we originally sold the put spread, then we went back in and sold the call spread, made the orders contingent upon one another. If you need more tutorials on that, we've got it right inside the membership area, how to use contingent orders. But basically what we said is, yeah, hey, if the market fills our put spread, then place the order for the call spread. We weren't going to place one order and then without placing the other order. We wanted them both to get into the market at pretty good premium. And we got a pretty good premium on both, very close, about $1.30, $1.35 on those. And basically what that does is that makes a very nice wide iron condor for Priceline's earnings, which are coming up tomorrow morning. So if we actually go to the Analyze tab on Priceline, I know I'm using it a lot tonight because it's just really, really important. You'll notice how wide our iron condor is. So here are all of our strikes down below. And Priceline is trading or closed today right about here, so a little over 111.30. And you'll notice how wide our iron condor is. We really gave ourselves a lot of room here to be right in Priceline, hoping that the stock doesn't make too much of a drastic move after earnings. And given that a lot of things are moving down after earnings, we gave ourselves just a little bit more room on the downside to be right. So you'll notice that the distance from the market to our first strike on the downside, just a little bit more distance than the market from here up. So kind of anticipating that Priceline goes with the general market in that they're having a lot of bad earnings coming out. So we might see a drop in Priceline. But at the end of the day, all we really want is we want Priceline to stay between 1070, which is here, and 1180. So if we have Priceline stay within about a 90-point range, then we actually make money, and that's just tomorrow. So you'll notice that these are also May contracts, so they're going to expire, or they're going to decay very, very quickly tomorrow after the open. So if we get a pretty decent move in Priceline after the open, then we should see these things dry up like a rock, and we'll get out of them very quickly. And you have to be really aggressive with your pricing and getting out of these things because, again, they are May contracts, so there's a lot of activity in them, but it's going to dry up very, very quickly. So you usually want to get out of these early in the morning if you can. Now, if we do see a move like we had in Whole Foods where Priceline goes outside of one of these bounds, then we have left ourselves a lot more room to adjust and move in one side or another. So if Priceline goes higher, obviously, then what we want to do is we want to roll up the put side towards the call side, and if Priceline goes lower, then we want to roll down the call side towards Priceline if it goes lower. And we can even roll it out to the next contract month going out to June. But we'll do all of that tomorrow if we need to. Hopefully this should be a nice setup. This is a pretty wide iron condor and Priceline. We usually don't get them this wide right before earnings. As always, guys, I hope you guys really enjoy this video. Please let me know if you have any comments or questions right below the video. I'll get back to all of those tonight and tomorrow before the open, and happy trading.